Welcome back, traders and investors. This is Joel Elconin and Dennis Dick, and we have Tim Collins and Bob Byrne on here of MarketFi Product Retro. So, how you guys doing this morning?
Doing
Good,
wonderful.
thanks.
Just real quick, Bob, we'll just ask you real first, and then Tom, you can follow. Just give us your education and market background a little bit.
Sure. Graduated St. Ed's University, Austin, Texas, back in 2000. Trading wise, I started trading in college, sophomore, junior year, around 98. Basically, like everyone at that time, I was a NASDAQ scalper till pretty much until we went to decimals, and like everyone else, kind of ditched it. Went over to the New York, started trading, scalping that area. Right in 2003, got off the scalping and became a basket trader in the oil and gas sector. Basically, instead of buying one stock at a time, you bought 25. This was really before the ETFs. And '07, early '08, switched over to the indices. And from a trading standpoint, that's about it.
Were you using algorithms to buy the baskets back then, or how were we doing manually?
Well, no. The interesting thing was there weren't many softwares with basket trading capability. So we actually helped design a couple of them.
Oh, cool.
And we would use the chart. So instead of looking at a chart of Schlumberger, my chart was an aggregate of 25 stocks. And so you never actually looked at the stock. I would never look at ESV. I would just look at one chart and buy them all.
So and that's just making up a number, and those were your own charts that you had created? Like, is that kind of how?
I think the original one we used was called, I think, InstaQuote. I think that was the name of it.
Do you remember InstaQuote, Joel? It rings a bell, but I'm trying to.
I think that I use it on eSignal now, but yeah, you can just basically add them all in there, and so you could add 20 stocks, and it'll just group them as one, right? And so instead of a $20 stock, you would be trading a $800 index.
Nice. Then you can just see how the chart works. So that's awesome, actually. And Tom, what's your background there?
There we go with the Tom already. That's all right. Somebody's ready for a happy hour before we get the opening.
Yeah, we got to go with Tom Collins. We had to throw it out there. Now, Tim Collins.
No, actually, I started trading in college as well, but my trading back in college didn't go quite as hot as Bob's did. Unfortunately, I was only doing it part time, and one thing you learn quickly in this business, if you're not going to do something full time, don't even bother. At least in my view, from an educational standpoint, doesn't mean you can't trade part time. But if you're not willing to put the study and the effort in behind the scenes, then the trading part time is going to be a big loss. But I went to a very small school in Maryland back in the 90s and majored in business administration, economics, and sociology. And the only reason I did 3 was when I went to talk to one of the counselors. And I said, well, I'm thinking about this one, and this one. And in the end, what I meant was I was thinking about doing 1. She looked at me and said, well, you can't do 3. And so then it kind of hit my radar. Well, why can't you do 3? Is it against the rules? She's like, no, it's just not possible. So, at that point, it was just a challenge. There was no specific point behind having 3 other than to prove somebody wrong. But I actually went into accounting and worked a bit as a financial analyst. That was a tad bit boring as a financial analyst just because I spent most of my time getting beat up by CEOs. So in 99, I switched over to working with individuals on the financial advisory standpoint, which was fun. Unfortunately, it kind of crimps on trading and creativity unless you get the right clientele. So 2007, I transferred over and started my own little firm. We ran a couple small hedge funds. And I enjoyed doing that, but that is also a very high stress environment. And right about that time, we had twins, which is also a great deal of work. You can't put in a part-time effort there. So I've been transitioning away from that a little bit more into consulting on hedge funds since I went from scratch and built several up, working with some private companies and consulting with individual traders. And doing trading on my own. And I've been writing with Bob over on Real Money. We started almost together right about the same time. I started a few months after him. So I twice a day. He writes once a day. We try to share and our wit and wisdom with the world as best we can. Uh, so that's a little bit about me.
Okay, so you have a Markify product there. Why don't you tell us about that unique name and just give us a brief description of that?
You, you know what, Tim? You came up with the name. Go for it. It.
All right. The name of the firm that Bob and I have is Retro Wall Street, and we have Retro Wall Street Trader Chat. The irony in all this is I spent 2 years in speech therapy learning how to pronounce R's and W's in a different format, and I stick them both in the same name. So, irony knows no bounds, that's for sure. But the whole concept was Bob and I have been trading for quite some time, but we've never been New Yorkers. We've never been in Chicago. We've never been in Boston. We've never traded in, the hot areas of finance in the U.S. We haven't been out west either. He's been in his little mountain cabin up there in Utah trying to, do his best Yeti impersonation. I'm down here in Austin, Texas. So we thought about the idea of trying to, bring back the old style of trading, the whole notion of the retro. It's bringing Wall Street back to a time when individuals would actually share and work together. Going back to a time when there was personality, and it wasn't, it wasn't just a computer on a screen. It wasn't just an algorithm. It wasn't just, people following other people. Instead, it was people working together. So the whole concept behind Retro Wall Street is just, going back to a time when it was individuals actually working together, looking to help each other, looking to learn from each other, but also having one heck of a good time during the day. We laugh far more than we trade, but I wouldn't have it any other way. So it's a community much more than it is just a tossing out, buy this, sell this, buy this, sell this. That's not us. That's not our style.
No.
When you do come up with the buy this, sell this, like how are you coming up with it, the different ideas? Like is it the community coming up with the ideas together type of deal, or like what indicators are you using to do this type of stuff?
There's definitely we've got people from all walks of life. So we've got people that focus on indices. We've got people that focus on bonds. We've got a lot of newbies in the room as well, learning.
Yeah.
For myself, when I'm looking at a chart, I'm trying to include, in anything that I want to go long, especially, I'm trying to include the big four in indicators. And the big four, I mean, I'm looking at a price. I'm looking at a volume indicator. I'm looking at moving averages, and I'm looking at momentum.
Okay.
Right now in this market, price has far and away been the most important thing. So first and foremost, especially on an intraday, I'm just focused on price. I'm looking at support levels, resistance levels, breakout levels. Volume right now for me, especially on a daily standpoint, is almost been the least important. And this is a big change from the last decade. When we get into a strong trending market like this with QE, volume matters, but on a scale on those four levels, it's actually been the least important. Moving average has been close behind price, and the reason is we're in a trend. So moving averages like your 8 and your 10s or your 13 days are coming up as huge buy points and huge support points. And momentum, I specifically use momentum in my baskets. Now I'll tell you, I know Bob uses some of those indicators, but he's very unique in the fact that he uses volume profiling, which is something I'm still trying to learn.
Yeah, like we've been saying for a while on the show, the momentum that this market's had, and it seems like, and I've been trading for 15 years, and it seems like you're going to cycles where you'll find a market that contrarian plays tend to work, and mean reversion tends to work. That's not working here in the last year. What has been working is momentum. So do you guys adjust your style for the type of market you're in as well?
Absolutely. I'll say from the profile standpoint, I mean, it's basically whether you've got a market in a trend or a bracket, right? So a bracket, just think of it as a churning market consolidating, where basically every time we break out, it gets sold. So, right now, I think it was, what was it, the 13th, was it? Last Thursday, I guess, or Wednesday, the market broke higher, and so it broke out of balance. And so you're back in a trend, which is, if you're going to be an intraday trader, you pretty much are just, you're buying pullbacks, or depending on your risk, you're buying a breakout. I think the difference is your activity, right? If the market's trending, less is more. Ideally, you try to get one trade and hold it. If it's a balanced market, where you're getting that back and forth. It's the kind of market where if you get on Twitter, everyone's complaining that it's choppy. That's for a day trader, that can be great because you've got 5, 6, 8 trading opportunities a day.
Yeah.
Okay, so you guys you follow technical analysis. What methods of technical analysis do you look at? Is it candlesticks, bar charts? Are you looking at multiple time frames?
For myself, I definitely prefer candlesticks. I'm not the encyclopedia when it comes to candlesticks, though. I'm not looking at, shooting stars and dojis and hangman all the time. I'm not going to focus on inside days or outside days as much as some folks who are just focused on trading candlestick patterns and nothing else. For me, and I know Bob's similar to this, especially intraday, we'll talk about tails. We'll definitely look for buying tails or selling tails, points of support or points of rejection on the buyers or sellers. And
can you just describe tails a little bit? I just want to stop you there. Can you describe that just for our listeners?
Sure. So, for instance, if I'm looking intraday, I might be looking at a 1-minute chart or a 5-minute chart. A lot of times you'll see tails a little more evident on a 5-minute chart. But for instance, on Twitter the other day, we had a run where the stock all of a sudden, fell under 40, and you saw a big push into the high 30s, and everybody on Twitter, ironically, thought it was the end of the world on the service, not the stock, that is. But what you saw was a quick rejection on the stock, and you saw a sharp rebound. Yeah. And what that creates is on a candlestick pattern, there's no body. When you're looking at it, it just looks like a long, thin line with, nothing around the edges. It's a supermodel candlestick, if you will. And we're looking at that for, hey, that's a point of seller rejection where buyers are stepping in. That makes for a fantastic stop level. Hey, if we go back below the low of that wick or that very thin part of the candle, I don't want to be in this trade anymore. But for now, I've got a very well-defined position. I can get long, and I have a point where I know I will stop out of that trade. We go below the bottom of that candle, I am wrong. I need to take my loss. I need to get off this trade.
So you're looking for that reversal there. Like that's what it's really outlining is basically, where the selling pressure is now all of a sudden turned to buying pressure. And you may actually have a few people caught, maybe short this thing, and maybe it could actually reverse and, get some momentum going the other way now. Is that correct?
Absolutely. And it's ironic that it doesn't have to be a reversal. It can be a continuation where, especially on a 1-minute chart, and Facebook is infamous for this for me lately, where you have a push higher, say, Facebook goes from 49.50 to 49.70, runs back down to 49.60, and the next candle it's up to 49.80 with the tail going down to 49.70, and still constantly closing at the high of the width of that candle or the measurement. And you're seeing these, 3 times in a row maybe where it's closing. People refer to it as a hammer pattern, but you're seeing these just long wick after long wick, meaning every time sellers are trying to step in and buy this or sell this stock down, the bears are trying to step in. We're seeing buyers reject them quicker and push it higher each time. That shows me that, hey, there's a lot of strength in this. These sellers can get no footing. I'm looking at, hey, I'm going to get long that, and I'll go 2 candles back or 3 candles back, and where that low is, we get back below there, then I'm wrong. But until then, I'm just going to keep following this thing all the way up. So for candlesticks, for me, it's much more of an intraday than it is on a daily basis. When I get out to a daily, when I'm looking for a swing trade, something overnight, something multiple days, I'm looking at 30-minute charts or I'm looking at daily charts. When we actually do talk about long-term investments and bring in some fundamental analysis, but when we get out there, we're looking more daily charts, we're looking more weekly charts, we still are looking at the candlesticks, but again, you're bringing more moving averages into play now, you're bringing more momentum into play, and the candlesticks will fade a little bit more into the background.
And what about fundamentals? I mean, you have the earnings, you have different things that are going on with stocks. I mean, how closely do you follow the fundamentals?
It kind of depends, I think, on the time frame. From a short term, my short term day trading, I don't really care about them. None of it's going to matter. beyond the initial reaction. The one thing I will say is I don't hold trades into a few specific 10 a.m. releases. And this has been the case for years. The Chicago PMI, it's the early release one, comes out at, I think, 9:42, and we get it at 9:45. Michigan Sentiment, ISM, I have no idea how they're ever going to react. So I don't hold into them. As far as trading, I just don't really care about those reports all that much. Monthly employment reports, GDP readings, the initial ones, don't hold into those. They just don't have any bearing on short-term trading other than that initial reaction. As far as investing, that's a little different. I mean, I do follow fundamentals there, free cash flow yield, return on invested capital, debt levels, stuff like that. But in general, I'm less concerned about it from a current standpoint and more how it relates to the past 5 or 10 years, right? Like a dividend yield. If you've got a dividend yield of 3%. Everyone wants a dividend now with the interest rates so low. But if it's yielding 3%, and you look at a chart of the dividend yield, and over the past 10 years, it's normally yielded 4.5%, you're probably getting a really crummy buy.
Yeah, that's true too. Just considering how much stuff has run, obviously, as people have bled into those types of vehicles, or those types of investments here, and sometimes obviously they can get really crowded, and that can get dangerous as well. So I think I agree with you on that being an important piece to look at.
And then by and large, if I need a CFA level 3 to understand something, I have no interest in it because it's not going to help me in trading.
Yeah, and I agree with you. I think like the short-term stuff, 100%, like the intraday trading, I don't think fundamentals really have any bearing at all here. I don't know how sometimes if the fundamentals have bearing even in longer trading too, when you see some of these valuations that are coming out here. But
yeah.
But so what's on your radar now, guys? Like what stocks are you looking at?
Well, for the past few months here in the chat room, we've actually been focused on steel, and we're definitely coming off of that look a little bit now. We began, positions in steel back in July, and then in August, I did a segment on Mad Money with Jim Cramer, the Off the Chart segment, focused specifically on steel. That was August 13th, I believe, and at that time, STLD, Steel Dynamics, was the top one on my radar. Secondly was U.S. Steel, and every once in a while, which is the ticker symbol X. And then we'll look at ArcelorMittal. That was more of a dividend put-selling type of play as opposed to an equity ownership type of play, which is where we went on STLD and U.S. Steel. And one of the things when you talk about fundamentals and we actually got into a little bit of those fundamentals. We have a lot of the people, including Yeti, who are willing to learn about fundamentals, even if they're only technical traders for the most part. Was one of the gentlemen is very big into following bonds and debt issuance on companies, and pointed out to us that there had been no movement lower in the U.S. steel debt, even as people on shows like Fast Money were talking about U.S. Steel going under $10 a share. So it was it was one of those things that we focused in on that. Now we're looking more towards coal, especially in the met space, since it does have a tie into steel. I know there were a few downgrades in coal this morning, and it's a little bit frustrating from a technical standpoint because several of those charts look like they were forming, nice flag patterns ready to break out here. But coal is definitely still on our radar. I believed it to be a second half story from this year. Probably a little bit, we're a little bit later in the second half than I was hoping for, although the stocks have recovered nicely off their summer lows. I think a lot of people see gold miners and silver miners in the same light. I still believe it's a little bit early. Bob does a lot of great analysis on gold and gold futures, and it's just not at the level that we're comfortable with. He's been buying pot. I've been buying Mosaic, POT, and MOS here lately. From a technical standpoint, they're definitely on the radar for swing trades or slightly longer term trades. And I don't think there's a day that goes by that I don't trade either Twitter or Facebook on an intraday scalp standpoint. Those are fantastic vehicles for that. Although I'm not gonna commit to either long term just yet. You got anything different on your radar right now, Bob, than I do?
You mentioned the pot and the moss. I was going to say that. Honestly, I haven't had a chance to figure out why the pot's up almost 3% this morning on 57,000 shares. So they like that now.
Benzinga News team, you guys got that? What's pot? What's happening over there with pot? We'll let those guys hunt that down.
If it closes over, if that thing closes over 33 and a quarter, it looks beautiful.
It's had major consolidation here, obviously, since the big breakdown. We consolidated here in this 32 level. The last 6-7 trading sessions just kind of hanging out there, forming major support there. And yeah, you got to like the breakout there on that.
Yeah,
one
see, I still like Mosaic better personally on the chart.
It looks better. Mosaic has a better chart.
It's been moving higher. It's obviously been, continuing to move up and gathering momentum. Where potash has kind of just been hanging out here for about 3 months here now. But both have been obviously come back quite a bit from their initial sell-offs there back in July.
Yeah, and don't sleep on IPI, Intrepid Potash, which that's going to be your high beta, your much more aggressive name in the space, but. I wouldn't sleep on that one either. This is where we talk about the idea of basket trades, where instead of buying one, you might go in and buy 3 or 4 names all together. That is one, though, that nobody talks about. Everybody talks about Potash and Mosaic, but IPI, Intrepid Potash is also one that I would keep on the radar.
Looks like it's waking up here a little bit. Just going back to the steel and aluminum stocks. Just got to get whatever ones want to ask this. Alcoa. I mean, Dennis and I have been talking about some of the dogs barking at the end of the year. Do you guys follow Alcoa at all, or have any opinion on that?
Begrudgingly so. I think.
I think everybody's begrudgingly when they talk to Alcoa.
Go ahead, Bob. I know you're going to say something.
Oh, I think it looks great. I mean, it had obviously the first move off of early October. Yeah. But if you throw up a weekly chart of that thing, and I mean, even if you just use a 10, a 20, a 50-day average, they're all turning higher. Yeah. I mean, I think the thing looks fantastic. Unless this thing, just looking at a weekly chart, if it closes a weekly bar under 850, I suppose I'd probably ditch it and just assume it's going to, die and go back to the bottom again. I mean, it's been worthless since I think since I started trading in the 90s, it seems like. It has. It's always been a joke. I mean, earnings season starts with Alcoa, yet who the heck cares about Alcoa?
There are better alternatives. This one's like taking your sister to the prom. There is just no upside in my opinion. There are better places to go. I mean, fundamentally, what are you looking for fundamentally on this? If you're buying this thing from momentum, there are 100 other names out there from a momentum standpoint I can think to go other than Alcoa. So I'll leave that one to you guys. I have absolutely no interest in wasting my time. And on top of that, the options, which I like to play options, are just horrid in this name. I can't even go and sell some bullish put spreads or puts on this and bring in any attractive premium. So I don't care how attractive your sister is. There's no upside for this for me.
Okay, so here we are at 1797, new all-time highs again this morning on the S&P futures. What's your year-end outlook here? Do you think this just continues on? The Santa Claus rally starts? Do we just continue to make new highs here? Or is something eventually going to derail this market?
I actually just typed over in the chat screen over here that we were only a couple sticks away from 1800 on the ES futures. Given where we're at right now, you generally don't just blow through a big whole number like 1800 and keep on going. It happened that we had one earlier this year. In general, I think if you just use like a 5 to 10 handle window above or beneath that big round number, depending on which way you're trending, I would assume we get some resistance between 1805 and 1810. From there, some degree of consolidation. I would be surprised if we didn't get a 3 or 4% hit. Everyone assumes we're running up into the end of the year. I see no reason on a profile chart to argue with that. I actually thought the drop that we had on November 7th was the start of a decent correction, and it just got reversed the very next day.
Yeah, just did not last.
You can blame QE, you can blame whatever. Who cares? I mean, blaming it's not going to make any money. So for right now, I'll say there's nothing that I see. You've got divergences under the surface, but we've had those for so many times this year, and yet they never amount to anything. 20, 30 handles maybe. But for right now, it looks like if you get a 3-4% correction, I would assume everyone looks to get on board. Still.
Right. Yep. We talk about it. The trend is your friend. The trend is definitely been up here heading into the end of the year. But potential resistance is hard to find since we've never been in this area before. So we talk about a lot of the stocks here, and I just say, hey, just keep moving those sell stops up, and protect yourself. Let the market take you out on the downside. We're gonna wrap up the interview here with Bob Byrne and Tim Collins of Retro Wall Street. You can check out their product on MarketFi. I believe you guys are also going to be part of the MarketFi Summit coming up later in the week. Guys, thanks for coming on and giving us your outlook on the markets and your approach to trading. We appreciate it. We'd like to have you back on again if that's possible.
Hey, thanks, guys. Had a blast.
And
Thanks.
we appreciate you guys having us on. Good luck